they're waiting for.
I got one more seat up here in the front.
Oh yeah. Hey, what's up?
Okay, everybody, we're going to get started with our Minnesota Real Estate Club meeting here. We got some star-studded speakers here. We're going to go ahead and talk about commercial real estate. Hey, listen up. I'm just kidding. Awesome. Well, we'll do some networking after this event as well. My name's Adam Hunt. I'm with Fuze Real Estate, and I love to be here. I love to support this event. And we got some amazing speakers and an awesome host. My business partner, Ryan Schroder, is going to be leading this questionnaire and talking all about commercial real estate. But let's give a big round of applause to our amazing speakers, Chris, Alexandra, and Daniel. They're going to drop some knowledge on commercial real estate, and I'm going to hand it over to Ryan Schroder, our awesome host.
Lovely. You can hear me. Hello. Hello. All right. So typically at the beginning of these events, I like to take a moment to kind of introduce our speakers and talk a little bit about why we put this event together. So seated nearest me, Chris Missling, our first speaker. He's the EVP of Commercial Investments at GJG Commercial. He began his career in 2011 as an analyst at a REIT, and he played a key role in 400 transactions. And by 2015, he had closed another 100 properties as a fund aggregator. Today, he advises clients on commercial deals alongside his partners. He manages $65 million in capital formation. He's a Minnesota native. He's a member of NAR, SPAR, and a bunch of other MINCAR, a bunch of rhyming sounding alliterations, as well as the ARGEAA, the Asian Realtor Association, something like that. I forget exactly what the acronym is. Asian Real Estate Association. Yeah, that's it. So, and then seated next to him in the middle is Alexandra, who is an investor and a broker. And she started in 2018 as an agent and a house flipper. She scaled herself to 250 apartment doors and then shifted to mixed-use strip malls across 5 Midwest states. And in 2022, she launched her own brokerage, Financially Free, and in 2024, a management company called Northern Lights. And she now runs her own portfolio and third-party assets. And then on the end, Daniel Montajira, a commercial real estate investor, capital raiser, and operator with ownership in 23 properties across 7 states, spanning multifamily, mobile home parks, storage, industrial. He came here from Columbia in 2015 with broken English and $0 to his name. Today, he's acquired about 1,200 multifamily units, 400 mobile home park units, and about 150,000 square feet of storage and industrial, while raising $30 million in private equity from investors. So these guys have serious credibility. And then as far as you may be wondering, like, how do I know these people? So Daniel's a friend of mine for several years now. We go on double dates quite a bit. We talk about clothes, hair, muscles, shit like that. Looking good all the time. Yeah, you know, we're very competitive with each other. He always forgets how old I am too, which is very flattering. I appreciate it. And Alexandra and I actually met through Rafik Moore a few years ago. And so I'm glad that I thought to reach out to her to include her in this event. And now I feel like we're buddies.
We are buddies.
Yeah. And then lastly, Chris, who I kind of quietly seen and admired from afar. I reached out to him because he ended up being the one to go into the office building that I was going to buy, and they're so close. And I was like, no, I'm going to reach out to him. Let's form a relationship. And now we've got this thing going. So I asked them here to share their insights because, frankly, I want to learn from them. They are big dogs in the field of commercial real estate acquisition. So, ladies and gentlemen, please help me to welcome our panelists for the evening. The way that we're going to structure this, I'm going to be asking the panelists each a question. We're going to go kind of on a rotational basis. If one of the three of you have something you'd really like to add or interject, please do, especially if you want to disagree. That'll make it fun. All right, so Daniel, I'm going to start with you, homeboy. So you started out as a petroleum engineer and came here from Columbia in 2015 with no money, no contacts, no credit, You even lost money on 7 of your first 11 flips. What made you decide to double down on commercial real estate instead of walk away from the business?
Oh man, that's a good question. Can you guys hear me okay? You can tell that I still have an accent, right? So I gotta speak louder. And that's a great question, man. I mean, the fact that I came from here, I will split that question into 2 answers.
Okay.
I mean, I came from Colombia just because I wanted to look for better opportunities, and I shared content here. And then as far as doubling down after losing money flipping houses, I just feel like you only lose when you stop playing. So to me, the fact that we lost money, it wasn't really a loss. I mean, now looking backwards, it was more of a blessing because it kind of taught us, that was our tuition, and now it kind of taught us that taught me and my wife and everybody that's been in my life that we need to double down, figure stuff out, and try new things. And at the time, we were flipping houses because we didn't know anything else. So we started researching the commercial real estate, and then I quickly learned that commercial real estate has a lot more sources of income compared to flipping houses. So flipping houses, you only make money when you sell, right? So all the rest of the time, you're kind of carrying all this risk with you. Whereas the commercial, your deals can be a little longer. You can afford to wait a little longer. You can collect money multiple ways from every deal. And also, there's a lot bigger opportunities in commercial real estate. And as far as the amount of, and just so that you guys know, I'm not talking about, sure, commercial real estate could be like $500,000 property, it could be a $500 million property. For the purposes of this here, because everybody's in the room here, I want you guys to think about commercial not as a big multifamily $50 million property. Let's think about commercial as maybe $1 million property. Because those, trust me, those are very, very juicy. Those smaller mid-sized deals, those are very good. It's easier, and it takes the same amount of work to buy a commercial property for $700,000 and then go and flip it in a year for $1.4 million. It takes the same amount of work that if you were flipping a house for $500,000, put $100,000 for renovation, and go sell it for $700,000. So to me, the numbers made a lot of sense, and just made a lot of sense. And then I found like there was a lot more opportunities there. So for us, we just like, hey, when we lost money, we're like, well, we gotta make money fast to recoup what we lost. And to me, the opportunity was like, let's go into commercial real estate. Maybe we'll make bigger fees, or we'll collect more income that way. And that's what motivated me to double down and just go all in commercial real estate. So looking back, it was a big, big blessing because since then, besides my house, I have not done anything related with residential real estate. And trust me, I am very happy I made that decision.
Yeah, well, lovely. So Alexandra, by the way, these first round of questions is more about the origin stories of our speakers here, so that's where we're starting. So Alexandra, so you went from teaching middle school English to owning a couple hundred doors, commercial real estate. So what was the actual leap that you took to go from a paycheck to a portfolio?
Yeah. Is my microphone working?
Yeah, it feels like you have to get it really close in order to get it. Or just talk out.
Okay. Yeah, so I was a teacher, and actually when I started teaching, my starting salary is $32,000. So I really needed to have supplemental income, and growing up, my parents had student rentals, and so I was really looking to house hack. And so my plan was to buy anything from a 2 to 4 unit building and move into one of them, and then rent all the others, and hopefully not have to pay a mortgage. Once I got into real estate, I put in 1 million offers, and the realtor that I was working with actually told me, he's like, hey, you should really come and join my team. And so he's like, I can answer your phone calls during the day, you can still teach during the day, and then after work you can come be a realtor. I think you'd really like it, I think you'd be good at it. And so then I was like, you know what, that sounds like a great opportunity. And so I joined his team, which was me and him. And
it's a big team.
Big team, yeah. And then basically that summer I was teaching summer school, and I was also doing real estate, and I just loved being a realtor so much more. There was so much more freedom. And so I guess I didn't have golden handcuffs like some people do. It wasn't really much money I was giving up, and I decided to just go into real estate full time. I was still looking for my first investment home that I Ended up buying a couple months later, and then I made the leap. Became a realtor, got my first commission exactly 2 weeks after my last paycheck from teaching, so I didn't have a gap there, which was really nice. And then got my first house that I flipped a couple months later. Actually bought it for $16,000. It was in the middle of nowhere, Wisconsin. From there, sold that, started buying properties on contract for deed, and then started doing more and more houses, little bigger units, got into larger apartments, mixed use, and then the rest is history.
16 grand?
16.
I feel like I paid that for a paint job.
No, I know.
Okay.
I paid that for carpet last year.
Yeah. Okay.
Yeah, so it was in the middle of nowhere, Wisconsin. The only reason why anyone ever would have heard of it was because while I was flipping this house, there was an abduction there of a girl. I had no cell phone service there, so I couldn't even YouTube how to do things. And my neighbor across the street was like this crazy meth head. And the only time you'd see him would be when it was like a thunderstorm, and he'd go out on his tire swing, like swinging around. He'd go play basketball. Oh my god. So it was really fun. Let a lot of neighbor cry.
Sounds like typical Wisconsin.
It was just like, it was like back at my parents' house. Yeah, just kidding. My mom's here.
All right, well, that's an entertaining story.
Yeah.
All right, so Chris, so your start was hands-on. You actually were renovating single-family homes and then a 64-unit apartment complex yourself. So how do you feel like coming out that way shapes how you operate and advise today, kind of doing the dirty work, the groundwork to start?
Yeah, so let me go back even further. I actually got started in 2003. I had a corporate job, worked at Lifetime for 3 years prior to that. And before that, I actually went to school for 2 years of college. At St. Paul State, I dropped out. Hated college, hated tests. So, I'm in the corporate world. I also worked at Best Buy for a year. But yeah, I just got this bug and to try to fix homes. And I kind of started that. I learned from my dad growing up as a kid. We do a lot of handyman work. My dad was a choir director at church, so we didn't have a lot of money, so we could go do handyman jobs on the summers and the weekends. So something just hit me where I just hated working the corporate grind. And all three I moved to Vegas. With some money that I saved, went there, bought my first townhome, and from there I just started fixing and flipping, and I was learning along the way, read a lot of books, Carlton Sheets. And so for those 5 years, I think I did pretty good. I did, actually in my opinion, I did really well. So, made a couple million bucks, but you know what happened in 08, 5 years later, in 08, market crashed, I crashed. So I, just went belly up and ran back to Minnesota with a tail between my legs, and with a great lesson. And so during that time, I was just thinking about what else I could do, kept reading, kept studying, and I'm just really obsessed with learning and teaching myself, the trade. So when I got the call in 2010 that there was a fund that was going to form, and that fund, it was formed from the recession. So it was the very first single-family REIT in America called the American Home Partnership. So I got a call from my buddy that lived in Florida, Tampa, and told me, hey, you want to come down here and work with us and we'll buy some homes. Help the company buy some homes, we'll buy some homes, I'll teach you how to do it. And so I did. I packed up my bag, drove down there, and started working for my friend and for the fund. We were the only aggregator for the fund, and we also partnered with them, so we would do some of the renovations and rehab along the way. But in that 18 months, I probably looked at 10,000 plus single-family home deals, spreadsheet analyzer, Excel formula, and just kept doing that for 18 months, 6 days a week, 10-hour days. And I just became obsessed with learning and analyzing numbers of how a fund that had, a couple $100 million at that time they bought 3,650 homes in that period of time. Off those, I was part of 400 closings, so that's where I earned my commission at that time. And the light bulb went off my head from that point, because before everything was kind of emotional. I was just kind of doing things in Vegas, fixing, flipping, kind of like emotionally, right? But when I learned that formula, that's when the first light bulb went off in my head. After they sold to another REIT here that was back in the day called Silver Bay Realty, based in Plymouth. They sold to them for about $260 million and some change. So I was out of a job at that point. Well, I got another call from my buddy who lived in Atlanta, Georgia in 2015. I moved there and did the same thing for another fund called the Brothers I bought. well, at that point they had 9,000 homes, but I actually sold the first 14 homes that I sourced in Atlanta, Georgia. So they really liked that transaction, and then from there, I closed another 100 more for the fun. And then at that point, I thought it was really smart, so I was going to go do it myself. And from there, in Georgia, started picking up one home, then 3 more, then 5 more, then 10 more, then up to 30. So I had 30 homes at that point, and then I was doing some fix and flip. And to your point, my fix and flip that I did not make good money. I actually probably lost more than I made. So, I was trying, I was doing some developments and some high-end homes in Atlanta, and it was tough. And I didn't know enough either, so I was kind of just, in my ego, wanted to just do it my way. But in that period, I also learned the hard way. So at that point, and then I started studying multifamily. One of my partners that lived in Georgia, he owned a small apartment, he told me, hey, you should look into this. So those 30-some homes actually was up to 40, and they were all over Atlanta, and I was just running around like a chicken with the head cut off, constantly fixing things, and I had some staff, but a lot of it was just me. I want to learn how to do it myself, which I did a lot of the rehab myself. But yeah, so in 2017, started studying multifamily, started learning about syndication, paid for the mastermind groups, probably 30 plus that I spent, and I started taking a deep dive on that. And then after that, in 2017, myself and one other guy, we bought a 6-bedroom apartment together, just him and I. And that was when the second light bulb went off in my head. Well, logistically, everything became easier. And so during that time, I decided to let go of all the properties, the single family homes. My partner and I, that one, we split the money. We made a lot of good money on it. We probably doubled our money. But it was just a lot of work, very stressed out. But the apartment that I bought with my partner, and I was there on day to day, that's when just logistically everything made sense. However, and the numbers were just phenomenal. It was like going in 12 cabinet, $35,000 a month. And this is back in 2017. But what it taught me is that also in that experience, that what I did not learn is the X factor of buying that apartment, which was a very rough area of Atlanta. So I don't know if I'm getting it. But anyhow, it was a learning experience, and I exited out of that, sold it, split, made some good profit, and then I went to Dallas and did it again. That's when I really got deep dive, and that's when I started doing the syndication, going to the groups, partnering up with others, and started buying properties out in Texas, which to this day still.
I find it interesting that the 3 of you all started in residential, maybe made a few mistakes, and then went into commercial. I feel like I'm the only person I've ever met that started in commercial and then went to residential. Actually, I started in businesses, then commercial, then residential.
Yeah, you did the regression.
I did.
We all want to graduate from residential to commercial to business ownership.
Well, now I'm back on.
We just like hard work.
Yeah, I guess so, or being overly legislated.
But to that point, I want to say that being in residential is not a bad thing. Because I see a lot of faces in this room, and like starting with your own home, flipping a house, doing a couple of small residential projects. It is a very, very good education. So I encourage everybody to do it, because a lot of the skills that you need for these bigger deals, the foundation comes from those smaller deals. And it's better for you to go and take a bet doing a $200,000 project than doing a $2 million project or $20 million project, right?
Learn small, lose small, whatever.
Yeah.
Also, sorry, I always am doing at least one house flip at a time. These commercial deals take forever until you're actually getting money in your pocket. It can be years. House flips are quick, so like all of us, we've done it so much that it's kind of second nature at this point, and we're not going to be trying to get a million deals at once like you used to have to when you were just doing house flipping. But if I see a really screaming deal, I'm just going to buy it, and I'm going to do it with my contractors. And so I guess I still am doing house flips, but
interesting. I didn't even know that. So Daniel, recently you got your first commercial deal like in a partnership. Where was it like, the structure you've been previously working on? And I believe you told me that you did it with none of your own money into it. Is that correct? So walk us through how you were able to structure a deal like that.
Yeah, so the very first deals that I did, just to give you guys some context, were bigger deals. Were in here is another reason why I like commercial real estate, because you can find partners to cover your weaknesses, right? So a lot of my partners were good at construction, a lot of the other partners were really good at management, The other partner was good at putting the whole deal together. And I didn't know what to do, but they're like, you seem like you're good at sales, so maybe help us find a deal, help us find land, or maybe help us find money. And I'm like, all right, sure, I can do that. So I started my career in commercial real estate, being that partner that will raise capital for these big commercial real estate projects. And then my partners will cover the things that I didn't know about. So by doing that, I think it was a good blessing because I got to learn how my partners were doing their portion of the project, how the construction guy was managing the projects, how the property management guy was managing everything, et cetera, et cetera, et cetera. But to your point, so that's how it started, and then we did a lot of projects like that. Then lately we've been in transition where I don't have many more partners that much anymore. It's basically me, my wife, maybe I have one partner in every deal, and basically that's it. And that way we keep a lot more ownership on all these deals because these other bigger projects, sure you get 5, 10% ownership, 3-4%. But then these other smaller deals, then you'll be on 100% or maybe 60, 50. So, when you look at all the numbers, I feel like to me, it's just better, way better because we have more control and things like that. But now, to answer your question, sorry, it took me a little long. I wanted to give you guys some context. Yeah, we put a good deal together. We found, first, when you find a good deal, your opportunities open up. And in this case, it was a deal that it was distressed, it was listed. So for those of you guys who said that deals are hard to find, this was listed. This was been listed by a real estate agent in the market. It was just overpriced. There was somebody was asking $1.3 million. And I saw it, I saw some opportunity, I made an offer, and I told them, hey, I'm gonna buy it for $700,000. Wow. And they came back to me and they said you're too low, come back at 750. Sure, let's do 750. And then during negotiations, inspections, we came back with another $35,000. So we ended up buying the property at 715. Now it's very easy for me to take this deal and tell a partner, hey, I need $250,000 for this deal. This property is worth $1.4 million. I need $250,000 to do the work on this property. So I need you to be my partner in this deal. Let's get a loan on this property together. If you want, let's be both on the loan. We're partners to bring the money. You don't have to touch anything. Just bring the money. We'll do everything else. And then so another thing that we did is we got that partner to come in, invest $200,000. Then I had a contractor, and I did it on purpose because I wanted a contractor to have skin in the game. So I told the contractor, you're going to do the construction job here, but I want you to invest $50,000 in the project because now you're an owner, you're going to take care of the construction, and you're going to be more responsible for this. And the contractor liked it. He invested the other $50,000, and then so now we own 50% of the projects, and my partners own the other 50%. I did it that way. Some people do 70% owner. Some people split 70-30, some people do 50-50. It could be multiple ways, but I did 50-50, and I told them, you guys put money, so I'm going to pay interest on your money, just to kind of protect your money, your investment there. And on top of that, because we were finding a deal, this is where I like commercial, because you can charge, you can get creative, and if you find a good deal, you can also monetize while you are doing the whole project. In our case, we bought the deal, we also got paid a commission when we bought the deal. I charged an acquisition fee in commercial real estate, so like $25,000 for finding a good deal. Because I found a deal for $700,000 that was worth 1.4. My partners were not mad at me that I took $25,000 for finding a good deal. And then we closed the property, and then we basically handle the work. We do all the management because we do the management. We also get paid for the management. If we handle it, I don't handle the construction. My partner handles it. If I were to handle the construction, then I would charge maybe 10% of the construction for the construction work. So that's how we kind of get paid while the deals get to the finals. So opposite to what Alexander does, I get paid in a little bit of fees. I don't flip the houses because to me it's a little distracting. Yeah. But that's my strategy to make some money. In the meantime, we pay the bills, and that's how we structure the deal. Basically, we found a good deal. And we walked away with money at the closing table instead of me having to bring all the money. All I had to bring was the experience, knowing that it was a good deal, and making sure that my partners and everybody else was aligned. Yeah. And that's what we did.
Okay. So just to recap, it's all about creating the right team, the right partnership, and playing to your strengths. So I'm going to ask you guys to try and keep your answers to under 2 minutes. Alexandra, what would you say is the biggest operational difference for you between running residential properties and commercial properties? Operational.
Yeah, so commercial is just easier. The leases are structured where essentially anything internal, like for example in a strip mall, your tenants take care of all of their internal problems. So you're not getting calls about a toilet or a leak or anything on the inside. Really all it is anything building exterior. You have to know how to do CAM reconciliation, stuff like that. But I think operationally, commercial is significantly easier than residential. And also the hours seem to be a lot better too. So typically your tenants are in those buildings during business hours. So although you might be having problems happening in the middle of the night, at least you don't know about it until the next morning. So you're not getting those panic calls at 2 in the morning, my basement's flooding or whatever. So yeah, I just think it's a lot easier, to be honest.
I also think it's interesting because commercial, the valuation, the value add is similar. It's all just based on the numbers instead
Exactly.
of like, the conditions.
Yes.
Right? So you guys are making some pretty
Yeah,
compelling
putting a good
arguments
lease on a property is huge, yeah.
All right. So Chris, you've also owned multifamily across several states and recently closed on a 112,000 square foot office building right over yonder here in the metro. So what would you say is your lane today? You've done a lot. What are you doing now?
Yeah, that's, I guess a year ago, I really never thought about office buildings. I track the markets, I track all the asset classes. I love to study research, but the opportunity came through a mutual friend of ours, Daniel, and I know him. So we got the numbers, just dissected it, picked it apart, and really what caught my attention was that the building was 36% occupied, and it was still positive net cash flow, and that just blew me away. And so I thought about that more and more, and just did some more research, and you can't find that in an apartment.
You need like 85% occupancy.
Yeah. Class A, 85%. The Class B and C, you're at around 67%. Depending on the unit count, but yeah, I mean.
What are you acquiring now?
Yeah, so right now, I'm still kind of looking at other type of, deep value add type of office buildings. Yeah, again, like we're looking at one can't really say, but we're looking at one in a nice area in the suburbs west, not too far away. And then we're looking at another one in Houston, outside of Houston, in the Woodlands, that also Ben knows about. And we're looking at looking at a way to acquire it. And yeah, it's a different metric, and I'm not, going to say that it's going to be easy by no means, but I also see the upside where there's a potential that you can see a 5x return on your money, which a lot of my apartments that I've gotten into, and I've had to roll myself, 2 to 3 at the best, a 2 to 3x your money at the best on any apartment that I've seen, unless it's a development, which is another different category. But yeah, so to this day, I'm still looking at those deep value add, and not only here in Minnesota, but yeah, Texas, back in Atlanta, and now also in Florida.
Does it sometimes feel like Minnesota's too efficient to have many value add options? Like we're too smart, I feel like.
Minnesota is actually a very sophisticated market.
Oh, I know. Everybody who I know who started here, they go to like Florida, the Carolinas, they just say what a lower level of competition it is.
But do not be discouraged. Again, do not be discouraged because there are deals out there. And
it's
just being more, what it takes is just being more active. It doesn't mean that, no, you're not going to find deals in Minnesota. No, when the trade-off is that you still make good money and it's low risk in Minnesota, but you're going to be more active and put the work to find those deals.
So, Daniel, I remember when you first started out in commercial real estate, you were doing mobile home parks, you're doing industrial, you're now about office. So why everything but apartments?
Well, I started doing apartments.
Oh, okay.
I started doing apartments. I'm still a partner in 7 apartment buildings, about 1,200 units. And so I always joke with my friends and I say, I only like to play games that I know I'm going to win. And then apartments felt like that when I started, and now they just don't feel like that. Everything feels like it's stacked against you. Like they go in with regulations, insurance costs, taxes, the protection, they protect the tenants and they protect you as the landlord, the investor. And everybody thinks like, we're all like, rich, wealthy, these like the bad guy because we buy these properties. In reality, we're the managers. But in these properties, I mean, we're trying to make money, right? I mean, we don't make money until we make the project work. And in apartments, it just felt like now it became very saturated. Everybody wants to be in apartments. You're competing against sharks, big institutional players, insurance companies, big REITs, very sophisticated investors. So I didn't want to compete with those guys. I wanted to compete with guys that were maybe my level, right? So that's why I pivoted. And I found good success buying mobile home park deals, because it's not the same dealing with somebody like Chris, who's being sophisticated and knows what he's doing in an apartment deal, instead of negotiating with an 80-year-old man that doesn't have a P&L, that doesn't have a rent roll, and just gives me his financials and a written notepad. To me, there's, I know I can make a deal work in those kind of assets, like mobile home parks are pretty good. Small bay industrial, I love that space too, because it's kind of the same thing. You deal directly with owners, you can find a little better deals, but also the tenant base that you're dealing with, it's much more. I love dealing with my commercial tenants. They're my friends, they're business owners, they're sophisticated, they pay their bills, they make money, and then I don't have to chase them for rent, all that kind of stuff. So that's what led me into getting into these mobile home parks. Lately, we've been doing a lot of industrial and office deals. So we found that opportunity.
I guess I should have not discounted your lack of multifamily. So, Alexandra, when you and I met the other day, you showed me an office building that you're buying. So, isn't the popular opinion that office class is dead? So, what are you seeing out there that the headlines aren't seeing?
Yeah, I think same as everybody up here, right? Like, we weren't always looking into office, but then you start to see things where, like, this is tax assessed at 2.8, they keep lowering the price, we got it under contract at 1.75 and probably will negotiate. But what I will say is this is my first larger office building that I have under contract, and we negotiated 60 days of due diligence. My partner TJ was there, and myself, where we're advertising and trying to get spaces filled. If we're not getting traction where we need to, we're either really renegotiating really hard, or we're gonna cancel it. So I'm not familiar with office. I don't pretend that I am. I currently only own my office that I have my brokerage in and my management company. So this is a new thing to me, and so I wanted to go about it really cautiously, and that's why I negotiated the 60-day due diligence, where I got to pre-market and lease spaces, and if it doesn't end up working out, we will cancel it.
Smart.
Yeah.
Can I say something real quick that I forgot? For those of you guys, how many of you here are familiar with the 1% rule of real estate? If you buy a property or call it $400,000, right, a house, if it makes basically $4,000 a month, then it's a good deal, right? A 1% rule. Now in commercial, so now this is what we're seeing in office and industrial. You can do not the 1% rule, but 2% rule, sometimes even 3% in those kind of properties. And this is why office is so attractive right now. We also bought an office building, and we love it because we collect like 3% what we pay for that deal.
There's huge potential. But also I'm not going to go into it blindly, so I'm going to make sure it's going to work before I pull the trigger on that.
So, Chris, you made the case before that disciplined investors choose, they don't chase. And then you've also said that the Midwest quietly outperforms. Will you go ahead and make that case to the room?
Yeah, definitely. In this business, and because of where I worked before, that's where I learned discipline. Before that, I didn't have a lot of discipline. I was just going by ego, just by my instinct, and I won some and I lost some. So having the discipline in real estate, no matter what type of commercial property is, or just even residential, you have to be disciplined, stick to your numbers, do not get emotional. And with that, I think your chance of success will be better, and you're basically mitigating your risk when you stay disciplined, stick with your numbers, and also it's okay to ask for advice from others that are doing the business, and really just being disciplined is by sticking with your numbers.
So we're going to take a quick 2-minute intermission for me to thank the sponsors. Can somebody, you get that slide over there? So the first one I want to give an opportunity to thank. By the way, these events we're able to put these on and do these for free to the public because of our sponsors. So that's why I'm just giving a quick shout out. So first over here, Community Resource Bank, please put your hand up. Community Resource Bank is a full-service community bank lending in the Twin Cities and other communities in the state of Minnesota. Greg Weber is the commercial lending department over there, and he does everything from 1 to 4 families, flips, multifamilies, commercial, industrial, etc. And has a banking limit of up to $10 million, and he's been with CRB for 10 years, so he can help you with pretty much any kind of lending needs. I don't see Hattie here tonight. Is she here? No? Okay. Well, our second sponsor was not able to make it for Novo Financial Hard Money Hattie. Third, I'm going to move on to Jordan. Where's Jordan? Is he here with Goosehead? I don't see him right now. Okay. Must not have made it, but he's going to be helping us to be able to move to our new venue for the August and future events, but we'll save that for later since he's not here to gain credit for it. And then fourth over there, we have our sponsor. I'd like to thank Joey Brew, the owner of Joey Roofing and Siding. He's been coming to these events as a regular for the last few months, and now he's stepping into a more prominent role with the club as a sponsor. I appreciate that. As Joey puts it, every property is an investment, and protecting it starts with a quality exterior. And his team provides trusted roofing, siding solutions that help owners preserve value. So, and by the way, we're actually, Fuze and Joey Roofing are going to start doing business together. So that's a little bit of an endorsement. Thank you, Joey. So
shameless plug.
Yeah. So now, as far as we're gonna get started on round 2, we're gonna get a little bit more tactical. The first part was just about kind of generally the background of our speakers. So this time I'm gonna start with you, Chris. So in this market, how do you actually find deals, especially off market, when it feels like everyone's chasing the same thing? Because all three of you basically mentioned you're looking for value, right? You're looking to clean up the problem and solve it. So how are you finding deals?
Really, I guess, doing this long enough, there really isn't like a magic pill or sort of formula. But I have a great team with me, and in my team, we just simply, we get my information and call property owners all day. And, we have a list of 20, 30, 50,000 names of apartment owners, retail, office, industrial owners, and we just, do some research. And we just start calling, and we just, offer ourselves an opportunity that, if we could sell a property or partner with us. But yeah, we have a script, and we're very strategic on how we find these owners that may want to sell or may want to partner with us. Or really, it comes to also providing a solution.
Yeah. And
how we present ourselves by providing a solution. We don't come off as quite salesy per se. And being that we're also investors, we can speak their language, and we can kind of predict or be prepared for the things that they may say to us. So it does help, but really there isn't a magic formula. You just pick up the phone, you call, and introduce yourself with a smile.
Whenever people ask me where I find my deals, I'm like, well, it's Facebook, it's Zillow, it's Craigslist, it's the MLS, it's through referrals, it's through word of mouth, it's through my attorney, my accountant, my whatever. So yeah, there's unfortunately still no silver bullet. Does anybody on this panel do driving for dollars, where you drive around, look for shit properties and contact owners?
We do once in a while whenever Amanda and I are at work. We've been spending too much time in the office. We're like, let's go to a neighborhood and look at industrial properties.
My brother and I have a couple of times, but haven't had any success.
I've not bought anything.
The last time I had done it, it actually worked out kind of nicely for me. I was driving around looking for half-occupied commercial buildings, and I found one that was for rent by owner. Contacted the guy, had about 9 meetings at a Perkins, and then got it locked up. And then I actually brought it to a meeting at Caspian. Was intending to buy it. And somebody said, oh, well, will you just sell the contract? I got somebody who's looking to buy. And I signed that contract after I signed it for $241,000. It's a great deal. It's the most amount of money I ever made to not buy anything.
That's awesome.
But that was driving for dollars. So appreciate that. So Alexandra, is there like a number or a red flag or anything that will kill a deal for you instantly?
No. So, a high number and a seller who's stuck at that price doesn't necessarily kill a deal if they're willing to be really creative with their financing. So actually, that's how I've gotten some deals, is by getting the seller to seller finance at really good rates. As far as a red flag goes, I mean, really the only thing that's like I most likely will walk away is if I have a phase 1 and they recommend a phase 2 for like contaminated ground. I don't want to deal with anything like that. But as far as the number goes, a really high number and a really stubborn seller who has maybe an ego attached to that number, I think that's a really good way to get a good deal.
For those of you guys who are not familiar, phase 1 is an environmental inspection that you do. And if you find something that kind of triggers, maybe some suspiciousness, with extras here, he knows all about it. Then it triggers a phase 2, right? And then that's like a little more complicated, where you have to do a lot of
very expensive.
Very
You
expensive.
can end up having to remediate one of my buildings that it was like at least a city block. You know what I mean? Like, I'm not going to get into that. I don't want to mess with that. I don't want that building that much.
I remember a building that traded hands in St. Paul along the Riverway at one point. They listed it for sale for like $100 million, and they kept reducing it, and they eventually sold it for $1 because it required $65 million worth of remediation, environmental. And so that's literally you had to take it for free in order to deal with the problem, and it was like 100 acres along the river.
I still wonder who took that. That's an amazing.
I don't know.
Like that.
So Daniel, you said before that, an IRR, which is a term for internal rate of return projections, don't tell you why someone's selling. So walk us through how you underwrite the seller's motivation, especially on those like messing on paper deals that you've taken.
That's a good question. Well, I guess the IRR, it really depends. I mean, it depends on what you want out of a deal, right? And how you structure the deal. If you have investors, then you have to get a little juicier deal, because you're gonna not only make money for you, but all the deals you're gonna make good money for your investors, right? Otherwise, they're not gonna want to keep working with you. But on paper, when I'm analyzing deals, sometimes when you see deals that are maybe not making a lot of money, so the returns are very low on paper for year 1, but then you get to see the property and the building, like where's the value? Like that's one thing that I like to see. I don't care very much about income year 1 or day 1 of this property. Sometimes if you're buying a building that is call it maybe collecting very low rent or empty, and you buy it for $40 per square foot, but you know that you can get a lease, clean it up, paint it, and then it's merely worth $100 per square foot. Who cares about cash flow day 1 or all this kind of stuff, because you're gonna double or triple your money within a year or 2 years by only doing those kind of things. So I look at a few things, like the price per square foot. To me, that's very important in commercial. So if I'm looking at deals in the Minnesota metro area, everything's trading for right now $120, $130 per square foot in industrial, for instance. If I find something for $70 per square foot, I know it's a good deal. Even if they're collecting low rents, I know it's a good deal. I know I can go and bump those rents. I look at the leases, right? Because of course leases are important, but price per square foot to me is a good metric to know that you have a safe entry point when you're buying commercial deals. So that, I guess that summarizes my.
All right. So yeah, I mean, kind of you had some rules of thumb and everything like that, like price and square foot. Okay.
Right.
So Chris, let's say somebody, talking about your kind of area of expertise. So let's talk a little bit real quick about 1031 exchanges, DSTs, syndication funds, etc. So for someone who's in this room and is sitting on a potential big gain, i.e. me, I've owned some rental properties for like 15 years that I'm selling, what are the moves to defer tax and roll up into commercial real estate? Asking for a friend, me.
Oh, definitely. I would recommend a 1031. So if you do a 1031 and you sell a property, let's say $1 million, or you bought it for $1 million, and it's over time it's for $2 million, and you want to sell it, your capital gain tax event on that is approximately $1.6 million. So off that, if you were just to sell it, your tax basis that you're gonna have to pay on the capital gains will be approximately a little over 530,000. So you have your federal and state, that's, in combining that, it's a little over 40%. So, you know, that way you get the money, you're clear, you're free, and something like that. I mean, that's how we started, so I didn't really know about 1031s. But then, if you do a 1031 and you want to continue to, you know, be an investor and you don't want to pay taxes, which I think a lot of us do not want to, especially in Minnesota, because it's very high, then a 1031 would be a very good option that I would recommend. And so that exact same property, you're going to save a little over 530,000, and that's going to just go straight into the cash flow of the property that that you're going to maintain versus losing that. So that's one good idea. And then also, if you are, if you own property, I think a lot of us probably haven't owned properties for 20, 30 years, but if you have, and you're at that point where you've already depreciated everything, and you maybe you've been an active owner, you kind of are tired, and you want to kind of just buy some more for your time, then that's where you look into possibly investing and roll your money into a syndication fund, which is something that Dan and I have done many times over, and that's just another option. I'm not saying it's the best option, but it's also a good option. That's what I like, because when I was in the business before, I created a job for myself, and yes, I assumed all the risk to get all the reward, but it took away all my freedom of time, so I wasn't able to travel for 2 years at all. And so after I learned how to reinvest and start investing passively into other syndications and other investments, that's where I was also help me lower my tax basis, and I do enjoy the freedom of time that I trade now versus where I was before. So those are just options that I would consider for anyone that wants to continue to also level up. So that $2 million property, and I started with a 64 unit, bought it for like 1.3, I sold it for a little over 3, but now I'm able to look at bigger properties but I don't have to do it all myself, which I like. The people around me, the partners that I have, we're all very smart, like-minded, so that it kind of helps for us to watch each other's back to make sure that we're not making any like critical errors or mistakes just because of our lack of education or just our lack of understanding things. So that's one thing, again, going back to the hospital that we got across the street. We talk weekly, we talk all the time about the project, the lease up, the value add, what can we do to force appreciation. And that's one thing I like about this world that I'm in now, where you have people around that are all, we all have the same mindset and really also kind of like the same purpose that we want to, have this freedom of time and to also be able to enjoy life, not just to get rich, which is not the purpose, but really to have the freedom of time and just to have the ownership.
Love it. I've got 4 more questions, and then we're going to open it up to the audience here. So, Alexandra, your edge is in deal structuring. So, could you give us an example of a win-win structure that got a deal across the finish line when maybe just a straight cash offer wouldn't have worked for you or them?
Yeah, for sure. So I'll probably go back to my first commercial deal that I ever bought for this one. This was when I had probably been an investor for maybe a year or so. I had bought multifamily properties at this time. I had never bought a commercial deal. I was actually meeting with the president of a bank, and he was coming out to look at one of the properties that I was getting an appraisal on. He just wanted to see it and talk with me. And he was looking at his phone, and he kept getting all these texts, and he was getting so mad and frustrated. And I was like, what's going on? And apparently they had foreclosed on a property, and he was stuck. They didn't have a management or team that was dealing with these tenants there, and he was stuck dealing with them, and he was seeing maintenance requests coming through and those sorts of things, and he just hated it. And I kind of didn't really have any cash at the time, because like I had said, maybe like a year and a half before that, I was a teacher and had bought a couple of deals, and I just didn't have it. And so he was complaining about it, and I was like, well, would you want to sell it to me? And he's like, well, yeah, of course. And I was like, well, what price point do you need to be at? And this was just a mixed-use building up in Hinckley, and he said $240,000. And so my cash offer, or with financing and a down payment, couldn't have been there at that point. And so I talked with him, and I was like, hey, would you guys be willing to sell or finance me? And then I was going to try to get a second position note to cover the difference there. And he talked to the board, and they said, no, it's a bad loan. They want it off of their books. And so then I was like, well, okay, that makes sense. what about would you guys do a second position note for me for 25%? So I didn't have to put anything down. Talked to the board and they said, no, we can't do that, but we can do it for 20%. And so I ended up getting into my first commercial property with this. I had to break 5% down. I brought my brother in on that deal with me because I had never done commercial and he had. And that's actually when I realized I love commercial because there's 4 residential above and 3 commercial down below, and I actually loved working with those commercial tenants and finding spaces for them, and it was a great creative deal structure that worked. Even a bank was willing to be creative with me. So, you think that they wouldn't do that. Always ask, right? Ask, even if it's a bank, ask them, because it worked out for me.
Oh, that's really interesting. Kind of reminds me of my first commercial deal. I bought it. I approached a guy who owned it about doing property management. He said, I'm just tired of this shit. I really want to sell it. I said, well, what do you want for it? He said, 1.6 million. And I was like, about 1.59 million short on it. And we ended up buying it, though, on a contract for deed with $50,000 down. I went to a friend and another buddy, raised the money, bought it, and then kicked everybody out, turned it around, and then got it appraised for $2.5 million 2 years later. So I do agree. It's all about solving problems and getting creative.
And I did get a 3% commission on that, so technically I made money.
All right, so Daniel, I've got a question for you, all right? What would you say is like the worst deal you've ever made, and what did it cost you?
Ooh. Oh man, that's a tricky one.
Too many.
So many. No, I'm kidding. Well, it's a tricky one because I don't feel like I made like really bad deals. But now, there's a couple in my portfolio that kind of keep me up a few nights here and there. Not because they're losing money, but because they're underperforming. They're not hitting the return metrics that we wanted, and it's just taking a lot more work and more time. And to me, it's we're running the deals, but also I'm bringing investors, and usually investors are my friends and people that I get very close with, and I feel bad, because I tell I guess I feel bad because they're my friends. Like I want these to perform, and we're doing our best. So you guys gotta be patient with us. We're doing, we're running as hard as we can, and we're trying to turn these things around, but things are taking a little longer. So that's kind of what makes it stressful. The good thing about commercial is that commercial, again, you have some sort of income that at the same time kind of supports the deal, and you can just maybe kick the can down the road a little bit so that you don't lose money. If this is looking back, the most stressful deals that I've made were the flips when I over leveraged a lot because I was bringing hard money loans, plus also I needed more money because we bought so many houses at the same time. I didn't have enough money to put money in all of those, so I brought investors to partner up with me in those deals. So I have basically 100% leverage, and I was paying 10% in hard money loans plus another 8% to my investors, and then these houses are not selling, and all of a sudden, we thought we were in a good market at 3% interest rates, and then overnight rates went up to 7%. So nobody was buying houses, and we got stuck with all these things. So we had to sell them and then go make money doing multiple things because we couldn't hold on to these houses. Otherwise, the interest would have killed us. So I think those were probably the most stressful one. And the lesson was, do not over leverage, and do not over leverage. Over leverage is not a terrible thing, but if you over leverage based on speculation, that's what makes it really bad. Yeah. If you over leverage in a deal like the other one I mentioned, $700,000. But this deal is worth 1.4, even if I go and flip the contract with somebody else, you're good. But on these flips, when you're like betting that this house may be worth $50,000 more than you pay for it, then that's when you have a problem.
Certainly sounds risky. Okay, so we got 2 more questions here. Alexandra, I'll go with you first here. So, what would you say you think is the most common pitfall for the people in this room who are residential investors that are going to be crossing into commercial? What would be your parting words of wisdom for them?
I think the biggest pitfall is actually fear of it. You think it's a lot harder and a lot scarier, and it's just not. It's possibly bigger numbers, but once you get into it and you start doing it and you look at these leases, you realize it's actually a lot easier than probably what you've been doing. And just like all of us, you know, we kind of switched because we realized, I mean, I think it's just easier. It's easier, it's more fun. The people you're working with, I actually think are a lot easier to work with. They're business owners, like-minded. So the biggest pitfall is being too scared to do it. But if you're saying if you are having a pitfall once you start, I would say structuring leases like gross leases like you would with residential, because you need to know what you're doing with commercial, and you want to make sure that you're structuring them in a way where it is nice for you to be a commercial owner, because you want to have commercial leases structured like commercial leases where the tenants take care of their internal problems. If it's retail, that's my specialty, where there's triple net and so tenants are paying for common area maintenance. You just want to make sure that you talk to somebody who does commercial and you structure your leases correctly.
I love that. There's nothing to fear. Fear itself.
Well, I wanted to add, I mean, like, I feel like a lot of people just overanalyze things, overthink it. But now with AI and all the tools that we have out there, I mean, man, you can, if you don't know what a triple net is, you can just, Claude it and say like, structure a triple net lease for this tenant, this is what they do, this is what they want, I'm the landlord, this is my property, these are the terms I'm looking for, I want to make this much money, blah, 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 and Claude does it for you. So, with AI, man, I mean, there's no excuse, honestly, it's just go out and do it.
And also start with mixed use like I did if you want to, where you have your apartments there, but then you also have commercial. So you can run your numbers and see if it works with the apartments, and then commercial's a bonus. If you can find a deal where you can do something like that, maybe it's more comfortable. That's how I started with it.
I love that you were able to work AI into it. Thank you.
Of course, yeah.
So, Chris, my last question for the evening before we open it up to the audience is another bit of words of wisdom for the people in the audience. So, give us a due diligence checklist if you're going to be looking at a deal.
Yeah, so my checklist is 45 items long.
Is that on?
That's it.
You gonna cite them or?
If you,
Yeah.
I don't have it all memorized, but
Mine is like 150.
If you want, I'll share with you, just reach out to me. But yeah, it's just a checklist, so, and I kind of follow that on all deals. I think what's really important is to look at like your lease audits, for multifamily, verify the leases, make sure that the tenant, interview each tenant, make sure that they're actually paying what they signed up for, find out if they have security deposit, and then find out, like, are they up on the rents or are they behind? I think that's very important to do. Not everybody does it. Myself, work with other clients, on the advisory side. Not, I do recommend it, but not all, do that. And then also check your economic occupancy. So just because a property is 95% occupied or 100% occupied doesn't mean that you're actually collecting all that income. So check the ledgers, check the deposits, and see what's actually being deposited, being collected and deposited. So those are two things that I think are very important that I think sometimes get overlooked.
Verify everything.
Can I say something real quick? Yeah. Guys, due diligence in commercial real estate is probably the most important part of the whole commercial real estate project, because that's where you make money or you lose big money. Mm-hmm. So be very mindful of follow these items. It's it's a process. It's tedious, but go dig for everything, because that's when you really find out if you have a lot of problems. And I guess it's a blessing in disguise. It's a lot of work, but that's where you really know if it's a good deal, and it also gives you the time to market the property, and also you find some bad problems and you just walk away from these deals. It's not like buying a house, sight unseen, where you don't even say that.
I do have to add something. I just saw this, and I want to bring it to everybody's attention if you're interested in retail, because I could not believe this. And I think it's something that actually probably happens a lot. So in due diligence, you're looking at the rent roll and you're like, oh great, this looks amazing. This is an amazing NOI. So last year I sold a strip mall to this big investor. He bought it, he placed himself as a tenant. It was a 77,000 square foot strip mall. He put himself at 3,500 square feet. We were getting $10 a foot gross, so $8 into, we're doing triple net. So I now saw that this listing was posted again. He's selling it for sale. And I was like, how is this guy, how did he increase his NOI by so much money? Well, he signed a lease with himself for 5 years at $62 a foot. $62. And so it is not illegal, but if you don't know what you're you're looking at and you don't know the market and you don't look at that and you don't know, that doesn't make sense that that guy is paying $60 a foot when the rest of them are at 10 or below. You could buy that, and in 5 years from there, when he pulls out, you literally are underwater. Like, you cannot make that deal work anymore. And so know what you're looking at. If something seems like it's too good to be true, fully understand it. And the only reason why I knew that was his company is because I knew he was placing himself in there. So nobody else looking at that would know. So Sunset Plaza, Beacon, Illinois.
Don't buy it.
Don't buy it, man.
One last thing on due diligence. I guess this is where AI comes in very, very handy, because AI can help you analyze all these leases. Of course, you got to do your work, but now you have a full-time analyst that will help you read these
Find a red flag
100-page leases that you need to go through, or all these documents, what looks iffy, all this kind of stuff. Now you have these tools that will do this in minutes for you guys.
Well, I thought they were talking about AI as well, because that's going to actually be our event in September. Is going to be on AI automation for real estate businesses. So
shameless plug.
Yeah. So, all right, I've got time for a few questions in the audience. Oh, Jesse's got his hand up right away. We have about 5. We got time for about 5.
Awesome job, guys. So, question for you. A lot of folks that I talk to who are doing residential, wanting to go to commercial, I'm like, yeah, but it takes so long, right? Like you said, Alexandra. It could take months for a deal. I got to pay the bill right now. What do you recommend for people that are trying to make that transition, that have, big monthly nuts and other things to do? Just hustle here or just go all in? What do you guys?
Is that for Alexandra?
For the whole panel. Okay.
Yeah, I guess the question is, how do you survive during a long sales cycle if you need to, eat?
Yeah, and I have a lot of people on my team that are making the transition. So I would say stay in the residential lane that you're in right now, and just keep that and keep feeding that into your commercial. So you're going to be taking, so you can be trading a little bit of time and learn and develop the mindset and the education, and put yourself around other people that are in the commercial world as you're doing residential, so that way you're not losing this until you have this. And I think it's okay to do both. Just understand what you're getting into before you make the jump all the way into commercial. Have a full understanding, have full confidence, and then also find the right partners.
Yeah.
That will also help you.
I agree with Chris. I feel like if you're going to do it, you got to do 2 things concurrently: the one that pays the bills and the one that you're building. And be willing to work 60, 70 hours a week, because nobody got rich being a little bitch. So you're gonna have to work for this.
I'll say, I want to piggyback on that, because that's how I started my career, just working with other people. I didn't know if I was going to get paid or not, but I knew I couldn't pull up these big deals by myself, not having experience, knowledge, money, or resources. So working for somebody else in commercial that has been there, done that, it's a hack. So if you're willing to put some work, you learn a lot, you get a lot of resources, plus you get paid while learning. So that is massive.
Yeah, I think that's great advice. Learn from somebody that working in the field, get paid to learn. Absolutely. And
the other thing is that commercial, a lot of people put everybody thinks that commercial is these $20 million deals, right? But not really. I'll give you guys an example. We found a little commercial deal, 6,000 square feet last year. We put under contract for $435,000, and 1 month later we sold the contract for $120,000 to somebody else who wanted the building, and it just took us a couple of months of work to do this kind of stuff. So it's a commercial deal, but it have to be a $20 million deal. It's fast. So I'll say, based on my experience lately, these smaller, mid-sized deals are a good place to start. $1 million, maybe under $1 million. You can also find really good success in those projects.
Yeah, my most recent strip mall that I bought was about 10,000 square feet. I got a really good deal. I got it for $370,000, putting about $200,000 into it. It'll be worth 1.2 and probably for sure under a year since purchase time too. So if you do these smaller bite-sized things, you probably don't need a partner. You can still do your other things simultaneously. It's really like the same thing as a house flip, which most of us in here are doing. So it doesn't have to be these massive, intimidating things. You just have to commit to it and not be scared.
Acquisition fee on the front end?
It depends on the deal.
I get commissions.
It feels like To me, it depends on the deal. If it's a deal that is very good and that is attractive to investors, and I'm being considerate of my investors, then I know if I found a good deal, my investors are not gonna find me on it. But if it's a bad deal, and I'm only doing the deal because I want to charge the fees, first of all, I wouldn't do it because that's not how I operate. But I know a lot of people who do commercial real estate deals just because they want to collect fees. They want to collect big acquisition fees. They want to collect big management fees, asset management fees, disposition fees, financing fees, construction fees. They only do it for the fees. So beware.
Yeah, that's the type you don't want to go into. Can I get a couple other audience questions over here in the purple?
Yeah, okay. I do right now residential, more like half-time job. So, because I like to do other things with my time, if you go into commercial, it has to be full-time?
No, not at all.
I don't think so. Most people that I know that do commercial real estate, they find a lot of time for golf. 10 to 4:30 or the hours.
I mean, commercial, like I've seen, is more convenient hours too, right? And a lot of property managers, if you don't want to be super hands-on, you could find really good people that want to manage commercial too.
But when you are starting, probably you don't want to pay management or...
Yeah, when you're starting, you probably want to do a lot of the stuff yourself, so you get to know the properties, the issues, like what happens a lot. I mean, I would definitely advise you.
That takes time, right?
It does, but it's not the same. When we're talking commercial, are we talking about 100 apartments, or are we talking about maybe one strip mall with 10 tenants?
Just like she said, you can start with something small, right?
Because if I guarantee, maybe she has a strip mall with 10 tenants,
Okay.
it costs probably just as much as the apartments. And her management, it's probably not as hard.
It's much more minimal. And also, I do extreme value add. So everything that I buy is like 50% occupied or less. And so I'm putting a lot more time, a lot more effort into it. It's my full-time gig, right? But you could buy something that's a little bit more ready for you, and maybe you get a little less returns, and you're not going to have like this amazing, from 300,000 to 1.2 million in a little bit of time. But if you want to put less time and effort into it, you can buy deals that are still good deals and maybe just a little less time intensive.
What would be a good start point?
Like a good price point or a good deal? Like, what do you mean?
To start small.
Like,
I personally think if you're going to be doing other things and you don't have the ability to commit full time, you may be better off getting a limited partner and some syndications and things like that, so that you can have the benefit of a professional management team that, like Chris and his team, they know the ins and outs and stuff like that. I think it's a little risky to go into a commercial deal if you're only going to be half engaged, you know what I mean?
I totally agree with that, yeah.
Yeah, or maybe find another operator.
But
you say, hey, I like this guy, they probably know what they're doing, or maybe they have some money, or maybe you found the deal, and it's a good deal, but you don't know what you're doing. Maybe something's a good price, you bring it to somebody with experience, so that, hey, here's the deal, let's work it out. I mean, you run it, but I get paid something. And I
You can
guarantee
learn, yeah.
any legitimate investors will take that deal.
Yeah, and my last 4 deals that I did in commercial, I was in a partnership in all of them because I wanted other people who were smart in the mix doing it. So that's the other thing I would say is maybe find another person or two that has a similar interest in you, so that way you're not doing it all on your own. Mitch, did you say any question?
Yeah, so can you talk a little bit more about financing? I know you spoke a little bit about it. Are you only looking for deals with creative financing and seller financing? Are you seeing a lot of opportunity with that, or even with low money down, like you talked about before?
I am not only looking for deals with seller financing, though. Like my office building will be traditional financing. It just depends on the deal. For me, with rates where they're at right now, I always try to get at least some seller financing if I can. But for example, with this office building, we tried to get him to a second position out of $300,000. He refused. We dropped the purchase price $150,000, and he accepted it. So, it just depends on the deal. But no, I would also look at traditional financing deals.
I'll say commercial this is also why I like commercial a lot, because the financing part, it's very creative. And it's more often than not, you'll find owners who will sell or carry back a portion of the deal, maybe give you some creative terms or something like that, instead of when you're dealing with somebody who wants to sell their house. When somebody wants to sell their house, they just want a clean exit and that's it. But in commercial, like, first of all, we're very open, and we are very open to do multiple acquisition strategies. But of course, everybody wants to just be bought out, and nobody's gonna give you $500,000 loan without even knowing you, right? So now we learned the lesson. We don't ask for seller financing from the get-go. We only ask for seller financing or seller carrybacks if we need it, after building a relationship with the seller. Because we don't know if the seller is crazy. I mean, are they gonna sue us and come back, take the property from us? Or, we have to build a relationship with them. We also, get to see if they're legitimate or not. And also they want to see if we're legitimate or not. So it really takes, it takes a little bit of finesse on that portion.
Yeah.
I'll say that your best bet is to go get a lower price and get regular financing. And that will be the best bet. And then second bet is like maybe get a little seller carryback. Getting full seller financing is a little tricky. I don't know.
But you can get, if you get good terms on seller financing, you can do what's called a substitution of collateral, and you can move that really good debt to another property at another time. So seller financing can be worth a ton. So I always do try.
This is like level 10 investing right here. Substitutional collateral. Yeah.
Yeah, exactly. So.
Google it, guys. Claudia.
Ricky, did you have a question, Dr.?
Thank you. Daniel, you talk about AI, man, so I gotta ask the AI question real quick. How are investors using AI right now? You talk about a few things, but what are other ways that people could be utilizing AI to save time and money?
I use it a lot for asking. Yeah, I should have asked this guy. He's the AI guy. He'll probably pitch in. I'll just tell you what I do. I mean, I'm not the smartest person in any room, honestly. I feel like I'm a regular guy who just does stuff and I'm just do it over and over again. And for AI, I just go and I use it for things that are boring to me, but I need to get done. I need to review a lease, so then I go and I review it, but then I run it through AI and say hey, you're an experienced commercial real estate investor in Minnesota. You're looking for this, blah, blah, blah. Give me the red flags of this lease. You're also my attorney and my accountant representing me in this deal. Please give me feedback. What do you think about this lease? Because I'm buying this property. And that's what AI does. It's like an advisor. It's having somebody that is very, it's like having an attorney and a big team of people working for you and give you an answer in seconds. So I do that for when I'm running numbers. I run my own numbers, but also I run them through AI. And if I want to say hey, if I change something here and there, what's it gonna take, or double check numbers because I can make mistakes, right? Double check the comps, give me some analysis of what's the demographics in the area, incomes, all that kind of stuff. So for very repetitive tasks, that's what I'm doing. I notice a lot of people smarter in AI than I am that are using it for way more high level things. But that's what I use.
Due diligence is one of its best use cases. It's amazing at how you can just input all of the data and say, look for inaccuracies. Manoj, I was trying to buy a business and I used it to do my due diligence, what I was doing. I was amazed. I mean, it probably took 180 hours of work and consolidated it into 4.
Due diligence, marketing. We tell AI, hey, create me a marketing package, a sales brochure because I want to sell this property. And I give it all the information. I upload the appraisal of the properties, I upload the photos, and it creates me this beautiful document that it would have taken me probably 2 days to make. And it does it in 10, 15 minutes.
Love it. I got time for a couple more questions. Anybody?
How did you go from?
Nice to see you, Nick.
Yeah, you too, man. We're closing our third commercial deal right now, and we've just done GPLP splits, like you said, I'm taking from 10 to 20%. How did you go from that to getting to taking 50%? Is it, did you ship out better deals or better credibility or what?
Because first I was part of the GP team, right? So when you're doing a syndication, you have the GP investors and the LP investors, right? So at first I was part of the GP team, and because I was only a portion of it, I would only get a small portion, let's call it 10%, right? But now, we are the entire GPs. I'm not talking about me, but my wife is also involved in this. We are the GPs. We're running everything. So we're doing all the due diligence, the construction, we're hunting for the deal, we're doing the analysis, we're getting the financing. I'm the one signing the loan. So because of that, that's how I get more ownership.
And a GP is a general partner, so a hands-on partner. LP is limited partner, so more hands-off, probably brought a
So on the other deals, because they were bigger, I didn't have financials to go and guarantee a $20 million loan, right? So we had to bring a partner who will guarantee a loan, and then so he will take a big portion of the GP, or somebody will do the active management or stuff like that. So that's why you structure it depending on the amount of tasks. And each time I guess is probably a good thing to say too, but each time we structure partnerships, I always tell people these are the main tasks that we have to do on this project. Which tasks are you going to take care of? And depending on those tasks, you get more ownership or less ownership. Because if I do more tasks, then I'm entitled to more.
Yeah. An allocation essentially based on the duties and running it. That's what we're seeing. Right. Yeah. So, Adam? Okay.
Hello. Oh, sorry. My name is Amber Rose. My background is residential and commercial real estate. I'd like to tell the room that everything is always negotiable in real estate, and that includes commercial.
Yes.
My question for the panelists is, one, where are you getting your data? And number two, what type of professionals are part of your trusted group of advisors? Because AI cannot sit on the board of directors at the bank. They also cannot have a legal license.
Right.
Well, yeah, and I would say that a lot of our data is coming from CoStar. So we have used CoStar really for our main commercial source of just research, which I think, just by far, it has the most vast and it's nationwide. So a lot of our data is coming from there, and then we're just looking on different sites just to kind of back up the information that we find from CoStar. But really, I think that's really it's really the best source.
Yeah, it's the biggest in Nevada. It's the 800-pound gorilla. Are you guys using anything besides CoStar, like Prexy?
I use Prexy, actually. I personally use it more than CoStar. What I like about it is that it's free, and so you get somebody who doesn't know what he's doing throwing it up there, and you see the sideways photo and the terrible financials, and you're like, oh, no one else is interested in this deal, and then you call him for like 3 weeks and he doesn't answer, like, oh, even better, he doesn't answer his phone. And then you know you got a real good deal.
That's all you're going to hunt his ass down. That's funny.
CoStar, Prexy, the MLS is pretty handy too, because you find a lot of owners' information.
And residential realtors who are posting like a commercial that maybe they're not as familiar with, and so you can get good deals on that one for sure.
Yes.
I'd like to add to that the Freedom of Information Act. You can go and request everything from rental license lists to code infractions to all sorts of stuff. So there's free sources. They're just inconvenient.
Yeah, and I wanted to answer your second question about the advisors, because I think that's very important. For me personally, I've always looked up to somebody. I don't really like to do things alone because I'm not the smartest guy anywhere. And I like to follow advice from people who have been there and done that. So me personally, I pay a mentor every month. I have this mentor that I just always go to. I have multiple mentors, but if I have a deal, I always run it by him. I always kind of like, hey, this is what I'm thinking about, blah, blah, blah. Like, what do you think? They just get me like, nice, or thumbs up. I'm like, okay, I'm up to something. If not, he's a busy guy, right? So maybe he just tells me like, don't do it, so that's enough. So having a mentor on your corner gives you a lot of confidence to go pursue these projects, pursue these deals. It's like, it really helps you explode more, because now you feel like, hey, now your decisions are not just your decisions, it's like they're objective decisions. And then you can, that way you make sure that you have something good going.
Well, we appreciate you guys for your questions in the audience. Let's give a round of applause. Thank you everybody for coming, and we're going to stick around about 8 15.
watching people's butts.
We're live? We're live. Welcome everybody to the Minnesota Real Estate Club. Look at the energy. Look at the energy. We're still live. Come to the next Minnesota Real Estate Club on Thursday, July 9. We had commercial real estate investing. Marina, thank you for coming in. Very loud and very What up, Joey? Joey. There he is. Roofing and siding, everything exterior wise. Joey got you, man.
Everything.
support?